You're now listening to the Open Africa podcast with Laolu, Nosa, and Furo. On this episode of the podcast, we will be deep diving into two startups, I guess, two startup scenarios. First, we'll start off with Carbon and the abrupt shutdown of their card business. And we will also talk about Brass and Prospa. So to start off with, Carbon, a digital bank in Nigeria, recently discontinued their debit card operations in Nigeria. This comes 2 years after they launched the service. Some of the reasons why we suspect this might have happened, obviously, this is from our understanding of the business, is foreign exchange challenges. So working with Visa and MasterCard comes with fixed USD costs, and we all know where the Naira has gone this year. Looking at the market, a lot of people, like every bank, offers debit cards, and so as a neobank or digital bank, you're coming to the market years later, and typically the customer that is already banked, you're probably like their third, fourth, or fifth card, and so you're not a priority per se, unless you give them good service, I guess. Then also, what we're seeing in the market today is a shift in shift in the market in terms of users are now more and more relying on transfers at like web payments, even at like point of sales as well. And we're seeing a growth in the reliance of transfers, because a big issue used to be the fact that for transfers you wouldn't get instant confirmation, but a lot of players have now solved for that problem. And so users are now getting more comfortable with making payments in by transfer. Thoughts?
I have a question. On one of the earlier points that was made around dollar costs, if I understand correctly, and Dr. keep me honest here, can NFBs can't issue directly, can they? They need to partner with a commercial bank.
Technically,
Is this correct or have I?
technically, yes, they can. It just makes no sense to do it.
Ah,
But technically, yes, they can.
okay. I ask this question because if it's a situation where you are partnered with a commercial bank, the burden of sourcing FX is not entirely, it's not yours, is
It
it?
depends on the nature. It
You
depends
just
on the
need to
nature of the partnership. Um, if you're doing a co-branded card, then you don't what's it called?
yeah,
You don't have that burden of FX. But if like
right.
carbon, you yeah, if like carbon, you are actually a member of the scheme, aka you have a direct relationship
Ah,
with the card scheme, then that all you need
I
the
see.
bank for is for settlement. The rest of the transactional relationship is between you and the card scheme.
But can I ask a question though?
I
Wouldn't
see.
so in a scenario where you're doing co-branding, and then the commercial bank is basically you're riding on their relationship with Visa or Mastercard, there are fixed costs that come with issuing those cards. Are you saying that while the commercial bank will sort out sourcing FX and paying, your cost as a MFB that's tied to that commercial bank increases as exchange rate increases still, right?
Um, Technically,
Yeah.
yes, but it's
Okay.
no different from how much it will cost the customer. So, for instance, the bank will charge you card maintenance fee in bulk for all the cards that they've issued. Because essentially, the way the relationship works is the commercial bank, for a co-branded relationship, the owner of the card is the commercial bank, right? The customer is the MFB or whoever that is using the co-branded card. Now, all the associated card costs for all the cards issued get lumped and billed. So if it's ATM, lumped billed. If it's card maintenance fee, lumped billed, card issuing fee, lumped billed. So they just treat you as one customer.
It's fascinating. I did not know that they went into like a direct relationship with the with the scheme. I don't know. Is it Mastercard or Visa now?
Visa.
What I
So
what I know about those contracts is that they're usually financially tough. I mean, hindsight is 2020. And I'm sure they're solid guys. They've been at this business for a while. I just think that like when it comes to cards, it's a different beast. If if it were me, for I started, if it were me, I may have gone the co-branded card route.
so now the co-branded card route is basically is a cost center for you. So you
Effectively,
don't
yeah,
you don't make any money from it. Essentially, what you're doing, maybe you make some money on the margin for delivery costs. Maybe you
yeah,
add some margin
yeah,
on like some on the issuing fee, but that's also capped regulatory wise. So you can't do more than what is
yeah.
regulated. So
But the reason why I would be open to that though, even though I'm not making money off it, is we all know that today, at least in Nigeria as is today, cards drive stickiness
so
in a way that transfers don't.
again, I mean, yes, that's correct. But I'm saying I'm just trying to paint why someone wouldn't go the co-branded route. Because the co-branded route
No,
also means you are dependent on their systems, like the bank you are. So if the bank that is issuing your card
yeah,
is down, your cards are down.
card is down. Fair,
You
honestly, I think.
yeah, you have no control.
Go ahead, bro.
While I understand that maybe 3, 4, 5 years ago, cards drove stickiness, I think we're getting to a point where cards are. There are a lot of days when I leave my house with none of my cards, right? Because I know that wherever I go, I can transfer and I'm good, right? So consumer behavior is shifting, right? I don't think cards are, and this is maybe me maybe jumping the gun, but I don't think that cards are so significant. Maybe for a certain segment, people that are doing mostly POS and transactions with agents, they might need cards, but I think even with agency banking, you don't necessarily need it.
Mhm.
Exactly. Exactly. So
Now you can still do transfer, but yeah, I mean, going out without your card is one thing, but if you also look at from the point of view of like subscriptions, for example, if you are using Chowdeck today, do you transfer every single time? There are people who transfer every single time, but are you one of those people? Say Chowdeck, Glovo,
I don't
any of those guys.
use any of them. So maybe okay. So to your point of subscriptions, I get it because like I do have a number of subscriptions that run on my card. So then that is when a card is important, right? But typically, a user would have just that one card that they rely on, probably, where they know that the account will be always funded for whatever transactions, and then all the other cards are like useless to them, pretty much.
Well, true. And look, I do agree that maybe card behavior is no longer peak in terms of how much of stickiness it can drive. But the truth is, the banker's instinct is to leave no food on the table. And what that means is whatever it is that I need to deploy to keep customers within my ecosystem of financial services, I will deploy it. Because if somebody is doing transfers with my app today, the goal has to be that at point of sale, if they're going to use a card, it should be mine. If they're going to pay on a terminal, it should be mine. I don't know that it is such a straightforward proposition for for neobanks, especially because for many of them, um, they've not spent as much time doing this thing as the banks have. Banks have large resources. They can afford to take a loss
But
on cards for years and just be think good off of other things. So it's not a fair comparison. I think what I'll just acknowledge is that yeah, card business is
I'll say
hard. It's really hard.
this is an easy argument. It's an easy argument to make in 2024. Um, but if you remember, when Carbon launched and when a lot of the new banks that are the big new banks launched, transfers were not as prevalent. So you
True.
kind of needed cards gave you legitimacy. They gave you it's what encouraged people to put have deposits on their in their account with you, especially if you are a balance sheet type business that needs to grow deposits. The more ways for the more utility your customers have, the more likely they are to keep balances with you. So that is why kind of cards were needed. Now, again, I mean, because I read the Substack and it's like it's an easy thing to say now, but it's not as
it's hindsight now. That's really what it.
it- yeah, is exactly. It's hindsight. Nobody thought transfers would become dominant like this. And even at that, even while transfers are dominant, at the same time, cards are still very, very prevalent in the market. Like like Laolu mentioned, the subscription thing, online payments, a lot of that stuff. There's still there's still a lot of utility for cards. A lot of people are withdrawing. Like the top use case for people for cards in this country is actually cash withdrawals. Now,
Cash
if
withdrawal.
you don't
Yeah.
have a branch, um, you don't have. These guys don't have branches. You don't have a branch. You don't have an agent network. Then how do people get cash out? Sure, they can do transfers as agents. That is also, I guess, with the rise of like agency banking and whatnot, they can do transfers. But the guys that are doing agency banking, the top agency banking guys, also have personal banking imprint, so they can keep all of that within their ecosystem. Like it's very easy to say, "Oh, cards are don't make sense," blah 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 blah. But this is why I even find it interesting that the carbon guys are pulling out. It's fine to pull out. This makes sense. Financially makes sense. But if you're going to take that channel away from your customers, you have to be actively driving alternative payment methods. And as it is,
Yeah.
I don't see carbon being at the forefront of driving alternative payment methods. They just removed it,
Yeah.
and
Yeah. I guess it was a financial
yeah,
decision, which is
which
fair.
is fair, but it's also at the same time that's where I kind of question a lot of the product thinking around it because you're looking at it from a numbers perspective, uh, but
Yeah.
in simple terms, that kind of thinking is not how people blow. Like, if you're going
Yes.
to remove cards,
Honestly.
you have to be thinking, how am I positioned for alternative payment methods? Now, if they remove cards and decided to say
Yeah.
they're going to actively drive transfers, they're going to actively drive NQR and all that kind of stuff, and they wanted to be
Zero fee
exactly, and they
transfers.
wanted to be thought leaders,
Super fast
exactly, they
confirmation.
wanted to be thought leaders in
Yeah.
that space, blah, blah, blah. They had partnerships with the top places where their customers were using their cards so customers could do it. I can
Hmm.
see the long term play. I can see the product thinking around it. But as it
Yeah.
is they just removed it and it's like, oh yes, people are not spending money, blah blah blah. The potential downside, the potential downside to that is it's already hard for them that if I'm being very transparent, they are not like one of the leading players in the space. They are a player, but they're not like one of
The neo
I
banking
won't say they're
space.
one of the
Yeah.
leading players. If you are not innovating and putting yourself out there, you're just being an also ran. And if your whole thing was, okay, a credit led business, they want to give out loans, how do you encourage deposits? Because you want deposits so you can lend. And for you to want to get those deposits, you have to
Correct.
have a sticky product. For you to have a sticky product, you kind of have to like bring lots of utility, whatnot. I don't see them thinking around the
Yeah,
utility. Maybe with this, their saving circles thing, that's how they're working that utility angle. But you don't want to be a place where people collect loans and leave. You want to be a place where people keep money and borrow from.
exactly.
So my thing is, there's the angle that other players are taking, which is, so for instance, I renewed my cards at Stanbic recently, and for my USD card, they gave me, I think, a Mastercard, but for my Nigerian account, they were like, you, the only option is Verve. We've seen other players sort of taking that path where they are now prioritizing maybe for US for foreign currency cards, for foreign currency transactions, they're still issuing Visa and Mastercard, but for like local everyday transactions, it makes more sense for them to go the Verve way. I've even recently seen, for the first time ever, I saw an Afrigo card in the wild, and that was interesting to see. So I think for Interswitch, on the other hand, this could be happy days. Not necessarily the carbon specific story, but then like the fact that Nigerian fintech players or banks are struggling with the rise in FX costs and dealing with the fees that are, that come with issuing MasterCard and
Yeah,
Visa. It means that there's a path for um Verve and Afrigo to sort of
yeah.
take more of
Interswitch.
market share in terms of card insurance in Nigeria.
Yeah.
Yeah. If we can, sorry, if we can take a step back just for listeners who may not have full context as to why cards are like tough, we have an episode that will try to link to this one. It's an older episode where we talked about like some of the challenges with cards. Um, but one of the things that makes doing the card business difficult is the dollar-based costs. That's the real foundational issue with card issuing, especially when you're dealing with like physical cards. That card plastic went from like 250 naira or 200 naira per piece in maybe 2014, and a decade later it's about 1.5 or something ridiculous like that.
The cost to
Meanwhile,
the
the
price.
the cost of
Yeah.
card issuance is fixed at a regulatory level. The price, the cost to issue a card to a customer is a regulatory fixed cost. There's a cap that you can charge. So from day one, you're already in a net loss position. That it is through the use of the card over time that you make your money. The problem again is that the transactional fees are fixed from a regulatory point of view, but your operational costs on for the card operations are not fixed. So when the rates move, it moves against you, and that's what really makes the card business very difficult. And that's one of the things that led to the creation of the Afrigo scheme. So for those who don't know, Mastercard and Visa, I'm sure most of you know. Verve, I'm sure it's also popular. Afrigo is the latest one that is being driven by Nibs. Nibs, of course, we've talked about in previous episodes. We'll try to link. And that's the one that Nigerian banks are now rallying around. And everybody is kind of committed to its success because it solves that problem, that cost problem for them. But we're yet to see it really start appearing in the wild. Furo has seen one. I've seen one, but that one, self, it was sent straight to a bank MD. It's not like I saw it in the wild like that. So yeah, Nosa, please go ahead.
So so Afrigo is, I guess, is kind of like the uh, government's response to card costs. Because it wasn't just the neobanks that were being affected. Um, Even the big banks had like FX obligations, and they were needing FX to satisfy those obligations. So Afrigo was kind of like a nationalistic thing. So that's the Afrigo thing. They haven't really launched it, or they haven't finished. It's still very much in like a pilot phase. Um, in terms of for Interswitch and Verve, almost everybody that's starting to issue cards now. I mean, there are not that many people, but Pocket's card is Verve. Um, Opay did Verve. When Pompey launched their card recently, they did Verve. So almost everybody's doing Verve by default. Like Nigerian banks are issuing Verve by default because the costs are going to be like Naira based. The billings is it not slightly? It's kind of different from the way Visa and Mastercard bill. Um, but even card business in itself, even if you take out this FX thing, and it's not just in Nigeria, card business is largely loss making in most parts of the world. Um, Now, in countries where cards are not as big, like Southeast Asia and the rest, there's kind of like an established and there's like a conscious decision to drive alternative payment methods. So, like when they do QR, what's it called? QR standards and whatnot, and unification of QR, like all that kind of stuff. Even like Alipay plus expanding, blah blah blah. There's a very very conscious decision to drive alternative payment methods. And back to Carbon again. If Carbon is going to take out this channel and say, "Oh, cards are expensive," blah 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 blah, then Carbon kind of needs to be at the forefront of driving alternative payment methods. I mean, maybe they don't have to be at the forefront, but there has to be. I mean, you're again,
There has to be ginger
yeah.
to
So for
do
me,
something.
on paper, the reason is fine. I just think the execution of it is driven by like an MBA grad. It's very numbers driven and not product driven, and that kind of thing is what really
Yeah.
affects how a business is seen, especially in this kind of market. If you're trying to be the you want to grow and you're trying to be the guys, you kind of have to be innovative. You have to be at the edge and be at the forefront of this kind of thing. And you shouldn't be pulling off cards
Hmm.
if you're not going to be kind of leading it. That would be my own concern with how they handle this. I
Yeah.
understand the cost thing, blah blah blah, but the narrative just doesn't make any sense. If it was one thing, if they said they did this and what's it called? They started championing NQR. I mean, Nibs is looking for people to champion NQR. It's,
You know,
I mean,
but
in
they
yeah,
just,
in that regard, you should probably be shouting out number, because I know they are on this massive QR drive. Um, they've been earlier this year or a couple of weeks ago. They were in one market like this, I think Bariga Market. They had a whole billboard. They were trying to like get traders to come on that QR payment vibe. Um, yeah, that's tough, Sha. Loki.
I mean,
I'm interested in seeing how far they want to take it.
it's a hard thing. It's very hard to achieve, but you can't want to win. I can't want to play in this thing without thinking about these things on the grand scheme. Like you can't be looking at it from looking at the customer experience from an Excel perspective. It's not really how you win.
Yeah, yeah. Honestly, I agree. And like you said, I can see the argument as well. Me, I'm pro cards because yes, transfers are popping, and there's a lot more user confidence in transfers. But for me, I still think like, yeah, you have to do cards, even if you won't make money off it. You need to push it. Maybe because I come from a more traditional point of view when it comes to like banking. I have very traditional views. I don't do AI lending. Um, and for me, leaving my competitors with a chance to take anything from me is a no. But yeah, I could be wrong, Sha. I guess we'll see in
I mean,
time.
like even direct debits, like even Libs is pushing direct debit. It's where is carbon in this direct debit drive?
in this journey. Yeah, and as a lending company, I know they paused lending too at some
No,
point.
they
If I
paused
recall correctly,
carbon zero.
buy now, pay
Yeah, but
later.
not.
Right, right. But yeah, as a lending company, there's that use case um, for direct debit more than most more than most other people, especially considering the cost of direct debit. I think Paystack is still the cheapest. I could be wrong. At maybe they're proposing I think 15 naira per debit. So for loan collection, that's like a great use case to have, or a great option to have. But I can also see use cases for like point of sale, right? Especially when you're doing like a big purchase. What that journey looks like is where I think maybe product teams need to start thinking about, and how people can, safely, you know, tokenize those accounts and then use them as like another point of sale channel, especially if
Yeah.
the journey is going to be shorter.
Yeah, I mean, we'll continue to watch as things evolve in the market. I think that their comms has not.
But it
I
go
don't
be
know. Their comms around it hasn't been, would I say, the strongest, because it was just. I think in May we were told they were no longer issuing, like they were not doing reissuance anymore, and then like a couple, I think 2 weeks before the shutdown date, they sent an email saying, "Look, we're shutting down cards." And then your cards were shut down. And then in the email, they were kind of like, "Oh, your account, you can still do transfers, blah 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 blah."
sorry, random. What happened if I got a card, say in
It's
January?
just cancelled. The card just won't work.
Ah,
Yeah, I
fascinating.
mean, because it again is because I just even remembered like the CEO did this long Substack thing on the cost of cards and why they even need to do it. Again, it's a very how do I put it? It's a very accountant view of product. Like it's very I don't know. I mean I got the
But
gist.
I guess
I know
that's the one that is paining the heart because it's like nah, it's not all about the numbers. Sometimes you have to bag an L for future
like
gain, as long as it doesn't
like
kill your
even if
business.
you're bagging an L, like at least the thought the whole thing just seemed very oh we're experienced founders, blah 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 blah. And I get that, that's fine, but there's just a abject lack of product thinking in this whole rollout. Like even in the explanation, you can tell they weren't really thinking about it from a perspective of a product thing. They were just thinking about ones and zeros.
also, I think the whole Substack thing was more
Yeah.
around crisis management, because people have been known to have quick hot takes about, oh, this business is in crisis or whatever. So it's also like help, like sort of putting information out there to maybe guide people's thinking and help people think that there are other factors other than just business going down the drain, that could inform them shutting down a specific part of the business.
But again, if they didn't want that, and this is back to the whole product thing, if they didn't want that conversation, the whole narrative or the whole rollout, the whole comms plan around shutting down cards
But for them,
would have
literally, the only
also focused on
transfer.
alternative payment methods.
Yes.
They don't
Yeah.
Yeah, you can't say what
exactly, and
they're
that's the
thinking,
problem is that they're,
but from
they,
like from a
they
customer
didn't
perspective or from what is
they're not
public
thinking
knowledge,
beyond this.
you know,
Like it's a very reactive thing.
do you get what I mean? Because you don't know what they're doing internally, but we do know what's out.
To be fair,
When there was a
to be
when there
entirely
was a chance
honest,
wait, hold on, give me 1 second. When there was a chance to actually defend the position and when we were doing the damage control, there was no mention of it. There was no even mention of pointing to or we see what's so called the rise in transfers. We've seen transfers flipping, or we've seen this behavior in our users, blah blah blah. There was no mention of the actual product.
Yeah.
Everything was just, oh, this is the cost. FX, this.
Fair
We have
enough.
to be savvy. Blah 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 blah.
Fair enough. So I see what you mean.
Yeah.
Customer was not forefront in the conversation. It was more just a business decision purely from the numbers.
Especially for mature founders. Because one of the lessons that I've been learning from other guys that have, built successful businesses, especially businesses that are popular in the market. You may not be market leaders, but you are popular at least within significant. You are significantly popular. Is that controlling the narrative point of view? I don't think in making a defense to your customers, your profitability, because again, customers don't really care about your profitability. I mean, you might say that that's unfair, but it's the nature of the game. It is capitalism. Nobody is looking out for anybody's welfare here. So even in walking away from something for you, which is primarily a
Mm.
financial decision, I think that how you spin that story is so crucial. Like even a simple, oh, we've seen that you guys prefer transfers to cards. That's what the data is telling us. So you know what? We're shutting down cards, but for the next 3 months, we're offering everybody, free transfers,
Yeah.
something, something, something. Just spin it one way, not necessarily a substack. That is not a long article again, because my customers are like, yeah, I'm not reading all that. I think it was a missed opportunity to really push their agendas. Nosa is pissed about the product thinking. I'm kind of pissed about like the marketing
I mean,
comms
it's
of the
you.
thing,
My
because
thing
I
is that
felt
you, but
it was
you
an
can't even you
opportunity.
can't separate it. I think it's all part of it because, and it's something that you see with
True,
that.
sure.
I guess that generation or that type of founder, where for them is the numbers, like thinking,
Overly
yes, being
pragmatic.
overly pragmatic is what makes them, they feel like is what makes them good founders versus the other people who are delusional and dreamers and not grounded in reality.
Yeah,
And that's what makes them solid, and
they
and this
lulu
is what
it.
and this is what makes them build sustainable products. I mean, fine, it helps them build sustainable companies and whatnot, but it doesn't help them build market leading products. And that's all was one of my
Yeah,
biggest problems with Paga, is that it was built is built with pragmatism at the core of it, because it's like always being pragmatic is what helps us survive. It's not built with customers in mind. Like it's not
yeah,
thinking of that kind of thing. And I mean, which, which this is even a good segue to go into brass, because there's the opposite side of it where you're completely customer driven.
it's too
It's
much.
too
They
much
lulu.
Lulu. There's no balance, and that kind of has its own downsides too, which is the brass story. I think the true
Yeah,
win is being in the middle.
correct. I was going to say that, because to be fair, there's a certain level of pragmatism that you need in financial services. But at the same time, if you want to build market leading products, you must be delusional about something, and you must prioritize the,
So
how do I phrase this? Kind of like the behaviors that lead to growth are not always they're not always net profitable.
you know what?
I just think sometimes you
No
have to
problem.
be fine with it. Maybe a good example. Sorry for just one sec. A good example of this thinking being applied in an institutional finance, like a systemically important bank, is GTB. And I'll contrast it with the thinking at Stanbic IBTC. There was a point where Stanbic IBTC was vehemently, I remember I had just joined the organization, they were vehemently opposed to the idea of unfunded accounts because, from an MBA point of view, from an Excel spreadsheet point of view, opening an account has associated costs that, you know, you don't want to take a loss on. So for the bank, a customer opening his account at a minimum of 1,000 naira, it was good enough for them, to recoup some of that money upfront. So the relationship managers, the sales guys, they would be in serious trouble if they were opening unfunded accounts. The organization was averse to it. And so for many customers that we spoke to within that period, when they ask, oh, how much do I need to open this account? And we say, oh, minimum of, I think it was 1.5 we're saying that time, they would be like, I know, like, I don't have 1.5. And they'll just fall away. And I compare it to GTB's strategy. Now, GTB, as we all know, is, when it comes to retail banking, they are number one in Nigeria. GTB encouraged unfunded accounts. It was a net loss to them, and it was a net loss to them, not even in the short term. It was not a business profitable decision, but they allowed it because, for them, having you come through the door was a better opportunity for them to convert you than trying to get you to give them everything that you have at the gate. It's like, oh, you've entered, yeah, I will, over time get this thing from you. And I think, for me, it just showed the difference in attitude between the two companies. And look, Samuel Garrett is a very big organization, hugely successful, but their retail business is not a driver of their success. GTB's retail business is immense, and it's no surprise that they've gotten it this way. So if they are taking the overly pragmatic route, they will have said, none of that unfunded account business. Open this account, minimum opening balance. Let's get this thing sorted. Just wanted to point it out because I was like, yeah, this thing is not, it's not a startup phenomenon alone. You have to be
Yeah, I
delusional
think
about certain
everything boils down
things.
to that.
Like, yeah,
Okay.
yeah, bring them in. We'll convert them after they
I think
enter. You don't
okay,
know
so I
how
think
you're going to
everything we're
convert them, but
saying about
you are
like the different
convinced that when they come
cases
in, they will
and
find a reason to
finding
stay.
the sweet spot
I
between
mean, another.
business and I
So
guess customers. I think Nusa, you remember that
No,
our
sorry.
one
Go ahead.
slide,
Go ahead.
one slide about the sweet spot of innovation. So technology, business, and the customer, right? And then you lead with the customer and then figure out what technology is available to power it and then how it makes business sense. Is it cost saving? Is it profit making? Like what is the real business underlying business value that will enable you, keep that product going or keep that, I don't know, service online for the customers, right? I think it boils down to that. So some organizations tend to lean more towards their own business goals and forget the customer. Some focus fully on the customer and forget that they're trying to actually run a profitable business, right? And then some, I guess, try to build and forget that you need to make sure that you use the right technology stack to ensure that you can scale. So I think it boils down to that. Yeah, that's like that theory. Yeah.
Anyway, I think this is a good time to segue. But before we even segue, another example of this is OPay. For anybody that has dealt with OPay on a corporate level, like B2B sales level, they know that OPay is notoriously spendthrift. Like they notoriously negotiate to the bottom dollar. They notoriously optimize everything, and that is why they're able to do all these translate all these things into savings for their customers. And it's it's
yeah,
also called. There's a clear reason why Opay is currently the market leader. They have found that fine balance of pragmatism and being customer friendly. Again, we might agree or disagree with how they've done certain things, but when it comes down to it, they have this thing on lock.
Yeah, yeah. You can tell that it's customer first. Even with the way those of us that can look at journeys and stuff through regulatory lenses, like I can see how some things are not pure, but everything is designed with the customer first. It's like, yeah, let's get the friction out of the way. And then the people who pay for that are the guys who provide them
Yeah, I think this is a good point
services.
to go to
So
Brass.
they will
Yes.
they will fight you on everything.
So
Oh man.
Brass
Anyway,
was recently
So
acquired
bruh,
by a Paystack-led investment group. I think other notable investors were Piggyvest Venture Platforms, P1 Ventures, and I believe some angel investors. Um, I wouldn't go too much into that. So I mean, Brass was a essentially like a business banking or is a business banking
mm,
solution. The idea was to get businesses to have a more seamless online.
I'll let Nosa start on this
I'll
one.
say first, it was this wasn't an because when the news came out, I saw there were lots of people kind of praising it, like, oh, it was an exit, blah 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 blah. This wasn't that kind of exit. This was this was a bailout, and
Yes.
I think it would be dishonest to look at it as anything but a bailout. Essentially, it's not as if like Paystack invested or whatever. There was debt that was kind of converted to equity.
Yee.
So it wasn't as if, we are investing at this valuation, blah blah blah. No, there was debt, a lot of debt, and the only way to the only way for I guess for someone to it was debt recovery, for lack of a very very crass terms. It
Yeah.
was debt recovery. There's a reason why the leadership could not stay in the company anymore. It's not
Hmm.
that was not an accidental whatever decision. It was just think of it like Amcon taking over a bank.
Which, by the way, if you don't know, is the one of the worst outcomes that you can have from your banking business, where you are so useless. The asset management company of Nigeria has to take over your bank.
Yeah, and it looks like I'm just gonna lump the two of them together, sort of. Prosper, similar business, having similar issues that Brass had before. You know,
I mean, Prosper swears that their own is not a liquidity problem. I think
so when
Brass
I say
had a
similar
liquidity
issue, I
problem.
mean like from a customer
Uh,
perspective, I can't move my funds. There's no
oh
commission.
yeah, like
You know,
withdrawals are,
so from a customer
yeah,
perspective, it looks
yeah,
like it's the same thing that's happening on both sides, right?
yeah. The Prosper guys, because yeah, like the line you drew is the same line that people have been drawing, and everyone and there was an employee that spoke to, I think, Tech Cabal, and the employee was saying that what they've had is technical issues, as opposed to liquidity issues. Because Brass, if those reports are to be believed, there's like a 2 billion naira debt on their balance sheets that they can't account for, which makes that story a lot darker than we've made it out to be on the internet. Prosper, I hope for the sake of the ecosystem, I hope it's not a similar situation, because the problem with liquidity challenges is that you can only hold it off for so long before it consumes your business. in financial services, there's only so much you can do. The moment you get to a point where you don't have the liquidity to fulfill simple customer, requests, it's going to go downhill really fast. I think Brass even benefited from a lot of brand equity because there are some banks in Nigeria that if people couldn't withdraw their money, if guys can withdraw their money for like 2, 3 days, there will be a run on that bank. So to have people stomaching issues for months, I think, like, yeah, it was a lot of brand equity holding them. Brand equity that I don't know if Prosper has the same level. So I'm really hoping for their sake and the sake of the ecosystem that it's technical issues and they just switching your provider will help you switch that problem. But that then leads me to a follow-up question. If Prosper is not an MFB, why is there reference inside their onboarding journey? I don't understand. If they are using
It
virtual
might be their
accounts
provider, no?
from somebody,
Um, One not to point out that when Brass started, it was said that it was a technical issue as well. That's
voila.
one. Uh, Two, in terms of what's it called? In terms of brand equity, I don't even think it's brand equity because they can't be a run if you can't transfer. Why you what the transfer is just failing.
You know,
It's not like they
fair.
had branches that customers will come and withdraw their money over the counter. Nothing was
I heard that small tickets were going through. I don't know if that's true or not, but I heard that if you were sending like 50-50K, that it would go through.
Yeah, so I mean they could push certain transactions, but they couldn't push like big transactions. So it's not as if even if there was a bank run because the people were kind of shit out of luck. That's really what it was.
Oh, fair.
Like it's not a thing where you could have even called CBN because there's nothing CBN can do in that regard. So I don't even think it is a. I would say that's for anybody that would probably be the worst situation because it's not like you see this heritage thing. NDIC insurance has kicked in. People are getting their money subject to limits. Blah 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 blah. If
Seamlessly, might I
if
add.
if that brass one, if Paystack didn't bail them out, there's
This is
people's money is gone. Like it's completely gone. That's just what it is. And and that's why for me, I never really understood a lot the narrative on the day the deal was announced. It was announced as if this guy has exited, blah blah blah. It was an exit. It was a bailout from a very very damaging situation.
Yeah, yeah. I think for me, what I'm more interested in is where they go from here. Some interesting businesses have come together to to build them out. I want to see where they go from here because I do think that there is space in that space.
So I mean, one
The sheer
they've
number of
already
people.
they've downsized, so it's most likely they're going to try and reduce their cost and reduce their burn. Um, they still haven't installed new leadership. I think it's like some people from Paystack that are kind of effectively leading it until they hire somebody. They will have to install new leadership. Right now, it's just stability. And once they get that stability, they can now start thinking because what
What
next?
next?
Um, I mean, the guys that put money that took over have enough liquidity to keep cost to make customers whole and just keep things going. But but yeah, that's again,
Yeah,
it,
it's tough.
it wasn't a
It's a tough place. Interestingly, in a different market, it could have been a lot more serious for the old leadership. Um, because here it kind of feels like yeah they sort of just walked away, slap on the
I mean,
wrist
it
in terms of maybe like
is
reputational people side eyeing you, but no real consequence.
because is the nature of the ecosystem in this country where you don't want to wash anybody's dirty laundry and you just keep it in house, hush hush, blah blah blah. If not, there should be like serious,
Yeah,
even
public.
the writing from like the journalists after. Nobody has gone to probe and asked.
Yeah, public
There's no public
inquest.
inquest. It's just charge it to the game. We are seeing people talk about, oh, this is a strategic opportunity for Paystack and Piggyvest to get into business banking. Neither of those companies want to get into business banking in that manner. Like
Yeah, not off the back of challenges and issues and having to spend money to make customers whole. Because again, the whole that is being reported is not small. 2 billion naira is not money to scoff at
it's like
in any
yeah, because
currency.
basically it's what's it called? Piggyvest already has what's their thing? They have their business thing. Not
Pocket?
Pocket, the other one. The one that they have pay with transfer. God, it's pink. I forget the name. But they kind of have like a business thing that they're trying to get off ground. Paystack already has their thing going with Paystack Titan. They're trying to, find situation and strengthen the thing, strengthening the proposition and whatnot, and their expansion. Getting into business banking was not on either of the agendas.
Yeah.
Yeah. I mean, it's a
Crazy.
situation they all find themselves in. I'm sure they'll
Crazy things are happening. I'm
peaceful.
sorry. I'm sorry. That's the song that came to
Yes. And
mind.
this is what we'd have done if we were doing this in person anyway, so it's fine. Feel free. Um but yeah, I think we've come to the end of this episode. I think we've discussed the three main things. Are there any final thoughts? Yeah.
Final thoughts. Final thoughts. And I will say this with every sense of responsibility. Financial services is not is not fun. It's not something you do because you're excited about design. So you build a fintech app. That's not how it works. At the core of it, it is a business of trust. That trust requires you to behave in certain ways. It requires you to uphold certain standards operationally from an accounting point of view. There are certain things that you can't do. And it seems like in the ecosystem there are many people who don't view it this way. And it doesn't help anybody. I don't want to act like a gatekeeper and say, oh, if you don't have financial services experience, don't do fintech at all. The truth is, you may not have financial services experience, but you can put around you the right team to ensure that you are doing the right things. It should never be said that, people can't withdraw their money because they're having liquidity challenges. These are stories that come out of the worst examples in when we talk about financial institutions. That's literally one of the worst stories that can come out of it. Your bank becoming illiquid. So if that's something that happens to you, it's not a good story. And the only way you don't get into situations like that is by doing the right things. I don't know where this ecosystem goes from here, but the sheer number of people that seem to be having, these challenges, especially the more popular names, it's a bit worrying. And like I will say, there's no perfect ecosystem. I mean, see all the things happening in the US. But the truth is, when your market is already, your economy is already garbage, the market is already small. People already think that this is a horrible place to do business. I don't think we have the same luxuries, that exist in the US. Even the way that the regulator will protect people, I'm not sure that it's the same thing.
In
So
also the access to
yeah, we need
capital,
to go
it's not the
through
same thing.
Yeah, yeah. We need to hold people to higher standards, honestly, as an ecosystem. You need to first hold yourself to higher standards. And there are lots of success stories to look at. Um, yeah, let me not ramble. It's just that it's paining me
Well,
small, sha, but
on the topic of
let's
the
see how
market
things.
is not the same, I just opened TechCrunch and I saw that two high school teens raised a 500k seed round for their API startup. They're just building API.
Bro, I say you can raise seed round, you can raise seed money to sell airtime. Somebody built a marketplace to sell businesses. He said marketplace to sell micro businesses.
And
Guess the
America is a
deal
fast
size.
market.
$5 million and under. How is $5 million a micro business? In my country,
Yeah.
you'll be a leading employer of labor at $5 million. And
Anyways,
that's
Nosa,
a
any
micro
final thoughts?
business.
Or
When you
we
have
wrap it
businesses
up?
being valued at a trillion dollars.
You know, I mean, final
We
thoughts.
are poor in this country.
There's a something that's actually going on in court, which is kind of like a similar situation um,
Is
on
this in Nigeria?
Synapse. So it's like a banking or as a service provider that's kind of lost their customers' money. No, 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 no.
Mm.
It's in America. It's currently in the court. So and that everybody's trying to find whose money is where. But the the tone in America is about how well their version of CBN because they have lots of regulators, but basically they want the FDIC to kind of step in because of and try and make depositors whole and fintech blah 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 blah. And for me, I think it's very funny because in that kind of situation, if it happened in Nigeria, CBN is just going to just say, "I told you people not to do this thing."
On look. They will on look. I mean, maybe it's a good thing for some people that they on look, sha, because low key, many people will be potentially facing jail time if they investigate everything
Yeah.
that goes wrong, even including people that created crypto app and just shut
Your
off their
comments.
business one
No,
day.
no, stop there. Stop.
Like, they will seize you. They will seize you at the airport. You will come and
No, but
explain.
really, really, like,
But
look
here
at
it's like,
Sam
yeah, we
Friedman, Abby
told you.
Friedman. Is it
Sorry.
not?
Don't do it
What's
again.
the
You hear?
consequences of that one?
He's in prison now. He's in hot prison.
Dream selling was a couple years ago. Now it's kind of, be capital efficient, focus on building solid products and really, really understand your market, your customers, and, build properly targeted
Yeah,
solutions. I think that's where the market is right now. Capital inflow is not as easy to access as before, so you kind of need to be super, super conscious of your runway and like understand how to prioritize what you're using your capital for to make sure that you're still um in the game in the long term. Yeah.
yeah. 25 years, by the way. That's what they sent Bankman Fried. 25 years in prison. Eee.
On that note, thank you for listening to the Open Africa podcast, and we will catch you on the next episode.
Sounds.